morning to all traders and welcome to another market science video. Today it's Monday, of course. We're going to talk about the US index, the S&P as usually, but I want to touch base as well on the FTSE, the UK's FTSE, as well as the German DAX, as we are seeing the coronavirus cases and in Europe actually Europe is getting hit by the second wave now, and we are expecting restrictions to take place. When we think about the uncertainty surrounding Brexit as well, now the FTSE might be coming under pressure fairly soon. Now, that said, the EU summit didn't lead us anywhere. Traders have really put aside the comments, the threats of Boris Johnson to walk away from negotiations, as they are more concerned about the coronavirus situation right now, as more businesses are actually calling for a rate cut. At the same time, we have Sunak trying to convince the towns that Boris Johnson actually put on restrictions, very heavy restrictions last week, try to convince them that he will try to get them some money in order to, cover up, balance their losses from the closures. So we are going to expect to hear about the stimulus package this week in the UK, as well as what's happening around Brexit. At the same time, in the US, Pelosi yesterday has put a 48-hour deadline to come to an agreement, to Mnuchin and also the administration, of course. So it's definitely going to be in the city of Atlanta in the US as well. And we also need to take into account and into consideration that we are really nearing the election, right? Pelosi wants to get a deal done before the election. The good retail data on Friday in the US might actually become more of a hurdle now, because now with good retail sales, well, there is less of a reason to provide stimulus, right? China, though, their GDP figures, they seem to suggest that they are recovering. They've actually released their GDP for the quarter a few hours back, and there was 4%, over 4% growth for Q3, which is very, very encouraging for other economies as well as they get out of the lockdowns. But the situation is now changing, because all the other countries they start new restrictions now, because the second coronavirus wave is at the forefront. Now I want to start with FTSE, as I said before, and that's because I believe it's going to be heavily influenced this week and going actually ahead up to the January deadline. Looking at this as wave 4 still, right? So that being said, I think this is a W, X, and Y complex correction. I see this move as a triple zigzag, but I don't think this has ended, because I believe this is an A, this is a B, and we're expecting now 1, 2, 3, 4, another move to the downside to take out this move, right? We could break below this trend line, maybe not, but in the short term, we could see prices actually going either way, right? Because if this is an A and a B could be like this is an ABC and we're moving down in an impulsive move, because this is impulsive, or it could be a case where this is A, B, C, D, and E. So we might see a triangle here and then break lower, right? Now, the other scenario I'm looking, again, for the FTSE, is that this is indeed, again, a 4, right? But it ended up here, which seems to suggest this sort of move being a 1, 2, 3, 4, and 5 for a leading diagonal, 1 over here, and then 2, 3, 4, and 5. Or, similarly to before, and this is why I have labeled these moves as a W, X, and Y, wave 4 is here, right? Which means this is an A, B, and a C, triangle over here, an X, a simple 3, and this is 1, 2, 3, 4, and a 5, which is an ending diagonal in Y, which seems to suggest that this is indeed in the medium term, this is a W, this is an X, and we're going for a Y in wave 4, and then we are going to move lower down, right? Now quickly on the German DAX. So we are on 3. This is a wave 4 for a running flat, and 1, 2, 3, 4, and 5. This could, of course, end like an ending diagonal over here, right? Because this, to me, looks like an ending, a running flat. But despite the fact I don't like this move too much for an impulsive move, I believe there's good chances that this is going to come into play. The other scenario is because I do not like this move, this could be an ABC for a W. So we could get an X, and then we could get a Y, and then we're going to move higher up for wave 5. Now let's jump quickly on the US index. The US index is not much to say here. We've actually gotten up to the Fibonacci of the expanded flat over here, just below the 95. And we are here now moving impulsively down for wave 5, right? Because of the structure of this move, I also tend to think that this might be a multi-structural move to the downside. And last, quickly on the S&P, well, it looks like we moved as expected, with this being wave A and this being wave B. It looks like we're going to go now lower for 1, 2, 3, 4, and 5 again for wave C of W, then X, and then Y for W, okay? That seems to suggest that wave 5 was indeed done over here. And now we're going to move down to correct to at least the 2200s before we start moving back higher. The other scenario that is a very good case is that this is an expanded flat, right? So this is a wave B of an expanded flat. Prices have more space to move to the upside, around the 3850 for wave B, because this is the 38.2 Fibonacci extension, right? And then we're going to look for prices to start moving lower. So we're expecting another leg up in this case, right? Either running flat to 2471, as I believe we also talked about last week, or the 1442, which is going to be an expanded flat. And last but not least, also a triple zigzag scenario here for wave B, which means that, well, this is probably a C over here for a W. This is wave X, so I'll assume that up here. And we're going to get another move to the downside for wave Y. That is going to be, of course, part of a complex move, because we would be in wave C. That said, now I just realized that would have been ABC, would be a W, X, and Y, right? So this is all for the day. Thanks for watching, and we'll speak again tomorrow.